Imagine this. You're holding onto a stock that suddenly triples in value in just 1 year. Do you sell and secure those gains, or do you hold out for even more? Well, legendary investor Stanley Druckenmiller faced this exact dilemma, and he made what he now calls one of his biggest mistakes: selling Nvidia too soon. He watched Nvidia skyrocket, and while he cashed in on solid profits, he ultimately missed out on some massive gains that followed. Today, we're diving into how Druckenmiller's choice reflects a common dilemma for investors, and more importantly, exploring 3 other stocks tied to the AI revolution that could present big opportunities. These stocks are not only performing well, but are also trading at more reasonable valuations compared to Nvidia. So stay tuned if you're interested in discovering undervalued AI-related stocks with huge potential upside. Druckenmiller originally bought Nvidia when it was around $300 per share, and within just a year, the stock was hitting impressive highs between $850 and $950 per share. Now, for most investors, seeing a stock triple in value that fast would be a dream come true. But when he decided to sell at those impressive numbers, he later regretted it. Why? Because post-split, Nvidia's stock price continued its epic rise, effectively reaching what would be equivalent to $1,300 per share before the split. Despite missing out on these additional gains, Druckenmiller hasn't lost faith in Nvidia. He's even mentioned that if the price drops to a more appealing level, he'd likely reinvest. This commitment shows his belief in Nvidia's potential within the AI space, even if he missed out on maximizing his gains. But here's where it gets interesting. Druckenmiller, like many seasoned investors, isn't just laser-focused on one company. Instead, he sees the AI landscape as a broad, expanding field with multiple opportunities. And while Nvidia remains a powerhouse in AI, it's far from the only company positioned to benefit from this transformative technology. Let's talk about 3 AI stocks that are gaining traction and are undervalued, yet packed with potential. These companies are innovating in AI infrastructure and development, with strategies that could yield significant returns over the coming years. Stick around as we break down each one and why they're catching the eye of forward-thinking investors. Our first hidden gem in the AI arena is Advanced Micro Devices, or AMD. While Nvidia often dominates AI-related discussions, AMD is quickly rising as a key player. In recent months, AMD has doubled down on its AI capabilities, particularly in hardware innovations. But what sets AMD apart is its new full-stack approach. This isn't just about creating high-performance chips. AMD is taking on everything from hardware to software integration, creating seamless systems that can serve various AI needs. AMD's latest release, the MI300 series of AI accelerators, has garnered substantial interest across the tech industry. These chips boast nearly double the memory capacity of Nvidia's top models, which is critical as AI continues demanding more data and processing power. Even Meta Platforms, the company behind Facebook, has chosen to rely on AMD's MI300 chips to support its advanced AI models. For AMD, this is not only a validation of their technology, but a huge stepping stone towards capturing a larger market share in AI processing. Let's dive a bit deeper. AMD has predicted that the total addressable market for AI chips could hit a staggering $400 billion by 2027 and even up to $500 billion by 2028. With its innovative chiplet architecture, AMD can produce top-notch chips faster and at a lower cost, setting itself apart from competitors. This flexibility allows AMD to meet the ever-evolving needs of AI applications, positioning it as a long-term player in the space. Before we jump into the second stock, let's take a quick pause. If you're enjoying this breakdown and want more insights like these, don't forget to hit that subscribe button. Your support means a lot and helps us bring more valuable content your way. Now on to the second AI powerhouse that's often overlooked, Taiwan Semiconductor Manufacturing Company, or TSMC. You may know TSMC as the leading contract chip manufacturer, but its role in the AI landscape goes far beyond just production. TSMC makes chips for both Nvidia and AMD, meaning it's effectively the silent partner behind their AI success. Without TSMC, the high-performance chips driving Nvidia's and AMD's AI advancements wouldn't exist. In its recent quarterly earnings report, TSMC blew past revenue expectations, fueled by the rising demand for AI chips. More than half of its sales are now attributed to high-performance computing, HPC, a sector essential to AI development. Major tech players like Meta, Amazon, and Google depend on TSMC's production capabilities to meet their AI needs, making TSMC an indirect but crucial player in the AI boom. What's fascinating is TSMC's financial standing. While it's deeply embedded in the AI ecosystem, TSMC trades at a relatively low valuation compared to Nvidia. With a forward price-to-earnings ratio around 22.4, TSMC is a compelling opportunity for those looking to invest in AI without paying the high premiums that Nvidia demands. With a growing market for AI chips and consistent revenue growth, TSMC's role as a fundamental supplier in AI is a huge plus for its long-term prospects. Finally, let's discuss the third under-the-radar AI player that's establishing a critical foothold: Broadcom, or AVGO. Broadcom may not be the first name you think of when it comes to AI, but it plays a significant role in the infrastructure supporting AI applications. While Nvidia provides the processing power, Broadcom's technology ensures data moves seamlessly between AI models and data centers. Broadcom holds about 80% of the market share in data center networking equipment, particularly in Ethernet switching and routing, both essential for scaling AI workloads. One of Broadcom's standout products is its Tomahawk 6 chip, which experts consider the best in class for data center networking. This chip ensures smooth data flow, a critical requirement as AI applications grow more complex and demand real-time processing capabilities. Broadcom has also developed custom AI chips tailored to meet the specific needs of tech giants like Meta, Amazon, and Google. These partnerships not only highlight Broadcom's expertise, but also position it as an essential provider of both AI networking and custom solutions. Broadcom's unique two-part approach, dominating both networking hardware and custom AI chips, means it's well-positioned to capture significant market share as AI infrastructure expands. Add to that its solid cash flow from existing semiconductor and software businesses, and Broadcom becomes a compelling, diversified option for investors. Broadcom is also valued reasonably, with a forward PE ratio of about 22.4, similar to TSMC's but significantly lower than Nvidia's, which gives it a more attractive entry point for potential investors. To sum it all up, while Nvidia continues to be a powerhouse in AI, there's a whole ecosystem of companies supporting and benefiting from AI's rapid growth. AMD, TSMC, and Broadcom each offer unique value propositions, from advanced AI hardware and essential chip manufacturing to critical networking solutions. For investors looking to capitalize on the AI boom without paying Nvidia's high premiums, these three companies are worth serious consideration. Thank you for watching. If you found this information valuable, please like the video and subscribe to our channel, Economic Hero, for more insights on exciting investment opportunities.